Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Medicus is one of the most interesting companies on the ASX and one of the best performing stocks in the last few years. Yesterday, the medical imaging software company announced record revenue and profit off the back of a stack of new contracts, particularly in the United States. But while its share price initially rose, it closed down more than 3%, a consequence of the stock being priced to perfection and the result being just a touch below expectations. Today's interview with Dr. Sam Hupert, co-founder and chief executive of Medicus, comes to you courtesy of our partnership with Ausbiz, Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. Sign up free at ausbiz.com.au. Nadine Blayney talks to Dr. Hupert not just about the result, but about Medicus competitors, AI, succession planning in the company, all sorts of things. Enjoy it.
Sam, nice to see you today. Thank you for joining us. Record result. And I suppose in some way it needed to be, considering the valuation. As I mentioned, higher share price than CSL. Are you confident that you can fulfill investor confidence in your future prospects?
Well, I can't talk about the share price. I leave that to the markets and the analysts and the traders. But certainly we've had a consistent growth pattern of 30% plus period on period, not just in revenue, but more importantly in after-tax profits. I think we've also had the biggest new contract wins, biggest set of new contract wins in the last 6 months, which set us up not so much for the second half of this financial year, but for FY26 and beyond. So what we contract now sets the floor for future growth in FY26, FY27.
Yeah, I think it was 10 plus contract wins over the past 12 months. Can you keep up that momentum, or was there something idiosyncratic about that time period?
Each contract has its own cadence, and the fact that we recently signed 5 in a period of 2 months is I won't say coincidental, but they could have been stretched out over a longer period. I think if you look at our over longer periods of time, the dollar value of the contracts we win keeps going up, every 12 months on 12 months. And some of that is the network effect. People know us. It's a big market. Some of it is price accretion. In other words, we charge more for each transaction. That's how we charge. And some of it's additional products that we've been able to sell back into the market. So it's a number of factors that have given that increased total contract value year on year.
Sam, I note that the Baylor, Scott and White, or BS&W, contract was fully implemented in 11 months from the date of signing. I think this is a record for the industry. So is this sort of the goal for speed of implementation? Is this what you think you can continue to achieve? Because I ask because, the market sometimes has difficulty sort of estimating the phasing of those contract contributions.
Yeah, so some of it not only depends on us, but some depends on their client and their state of readiness. Some clients are rolling out other product that they need to do, like an electronic health record, before they roll us out. Baylor, Scott and White didn't have any of those other restrictions. So you're right, from time of signing it was 11 months. The first 6 to 7 months really are under the bonnet, planning, testing, preparation. They started to go live in June, and there were 4 sort of, cut across where they switch off their old system on a Sunday night, start with Visage Medicus on Monday. So we really did the actual go live where the radiologists changed systems from June to September, which, as you say, is unusual, very unusual in the industry. But it's actually better for both companies, because once they've made the decision, they want to move on our platform as quickly as possible. And for us, it's better because we obviously get that transaction revenue sooner. So it works well for both.
Now, you've continued to build the pipeline of opportunities really across all market segments, across all client sizes. The strong result, though, is driven largely by the North American segment. So where are you focusing on growth going forward? I'm talking geographies.
Well, squarely on North America. and particularly the US, roughly 60 cents of every dollar spent in healthcare globally is spent in the US. So it's a huge market. We have a strong footprint there, and we've gone from a bit over 7% market penetration to a touch under 9%, but there's still a huge amount of runway left. So I think our number one, the prize is definitely the US, and that's where we will continue to focus. But having said that, we've won contracts in Germany in particular, where we have a base in Europe, and that will be a secondary growth market for us, but it'll be slower and more midterm, whereas the US is quite rapid and here and now.
And you're quite confident that there will be no major upsets coming from the new administration, no big changes in how the technology is being adopted? Will you be largely immune to any of the instability there?
No one can be 100% confident. As you see there, things change daily, but we haven't been impacted by any of the things really that have occurred pre-election, like interest rates. We haven't been impacted by the election itself, so people didn't hold off making decisions for the 6 months beforehand. And as far as we can tell from what we read and what's out there in the press, we don't see anything that will negatively impact us, certainly not at this stage. And speaking to our clients, particularly in the US, they don't see anything on the horizon either. But, the president can make executive orders that we just haven't thought of, but at this point, we don't see any impact.
Well, you've got quite a lot of cash on the balance sheet, $180 million net cash position. I know you've been asked this already. So potential M&A, obviously you'll fund organic growth, but what could potentially be in your sights in terms of non-organic opportunities?
Yeah, so as you've rightly pointed out, we believe we can achieve our growth targets organically, so that we don't have to do M&A just to do that. But we think there will be some opportunities, particularly around extra capability, areas around AI, which is becoming a lot more commercial in the health space, where, look, there are hundreds, if not thousands of companies, each that has a small pocket of technology that could be of interest to us. So we are actively looking. As you say, we have plenty of dry powder, but we'll be very, very selective.
Is there any competitor that's threatening to come in over the top? You still got this moat around you, these barriers to entry?
Well, we think our technology, we've always said, is 18 to 24 months ahead of the competition, and we believe that, if not even more. We keep on moving. We've been one of the first, if not the only ones, to be fully cloud-based, so we haven't put an on-premise system in the US in 4 years. So all of our clients, all the new contracts we announce are all fully in cloud. So we already have that up our sleeves. Plus, we believe that just the whole way we handle the image, that we don't compress and send it, we stream it, and it's unique and proprietary, gives us that moat. But having said that, your only defence against competition is to move quicker than them. So we're always continually reinvesting in the platform and new capability.
I was speaking with an analyst today who pointed out that the next phase of AI would bring him to think that you'll be able to make a lot when it comes to the data, the database of diagnostics that you have. What are you working on there?
Well, the first thing is, even though we handle a lot of data on behalf of our clients, it is their data. And even if you're a researcher in an institution, you don't have carte blanche access to the data. But having said that, we do have collaboration agreements with a lot of key medical centres, academic medical centres, and on a project-by-project basis, we can get, under certain conditions, access to anonymised data, which no one gets it without being anonymised. So we do have some advantages there, and we are using those as part of our collaboration, particularly around upcoming AI projects that we think would be material going forward.
Sam, just in the interest of time, on a personal level, you co-founded the business back in 1983. You're clearly still passionate about growing the business, and effective, I must say, as well. But can I ask, is there a succession plan in place? Any idea of how long you want to keep running this show?
Well, it's good corporate practice to have succession planning, and it's a key function of our board, not just for myself, but for other key executives. And so we have quite a robust and ongoing process. So there's no definitive timeline per se, but people say, well, what happens if you get hit by a bus? I'd like to think of something not as dramatic, but if I want to go on a holiday. So we do have that process, and you would expect us to. But I'm enjoying what I'm doing. I particularly enjoy the clinical side, the ability to see the research, and more importantly, the impact that we're having in moving the needle clinically. Not to mention that financially, it's been rewarding as well. So I'm not going anywhere at the moment, but we are always making succession plans, as I said, not just for myself, but really for all leadership.
That was Dr. Sam Hupert, co-founder and CEO of Medicus, talking to Nadine Blayney on Ausbiz, Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. Sign up at ausbiz.com.au. It's free. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.